everyone, it's Liz from the Barletta team at Ligris, and I'm super excited to have with us today Kristen Weekly from Leading Edge Real Estate and Kathleen Cadell from Fairway Mortgage. If you have been following the channel, this is kind of like a return. We did a video 4 years ago when we were in the midst of COVID, if you can believe it. And time has just gone in an instant, and we're here again. So we figured we'd get on here, chat a little bit about like what we're seeing now, how sort of the market is different, things that are working, and things that we're kind of seeing for the horizon in the spring market. So, Kristen, if you want to start, sort of just how things, I guess, have changed or shifted in the last 4 years.
I mean, have they though? I mean, that's the real question. I mean, I feel like we set a new bar with COVID with like how, low inventory, a lot of motivated buyers, people really wanting to move. And I haven't really seen like a huge difference in that. Like, obviously, like the interest rates are higher. We've had a few periods of lulls as a result of that, like namely the fall of 2022. But honestly, other than that time frame, things have not been amazing for, just for buyers all over the place because, a lot of people are locked into the lower rates. They don't want to move unless they have to move. Then, we do have like some people have just kind of gotten off the fence, but a lot of those folks are folks that, they don't have anything to sell. A lot of people are staying put. So, low inventory has basically just been a theme for my entire real estate career at this point, which has been 10 years. So it's pretty crazy.
No, I know. It's true. It's funny because there's so many things that we had shifted in COVID to do that have remained. Like we sellers tend to not come to closings anymore, like how it used to be. We did a little bit of that before, but like now that's just the standard. So from
Yeah.
our perspective, we see a lot of the things that kind of has stayed in place, where maybe
Mhm.
things that just worked better and we
Yeah.
stayed in that way. What about you, Kathleen? How have you seen just generally in the last couple of years?
Sure. So during COVID, we had the craziness where we were hiring everyone we possibly could because it was just total mayhem for us on the lending side. Yes, the purchase market was crazy, but mortgage rates hit their all-time low. So everybody was refinancing and buying, and it was just nuts. Since then, in the last 3.5 years, there's been a massive contraction as far as mortgages go. Here's a fun fact is that we had 450,000 licensed loan originators then, and now we have less than 80,000.
Oh,
So
wow.
there's been a massive lending side of it on licensed loan originators, and interest rates have now normalized. So we're likely not going to see those 3% incredibly rock bottom rates. We're more of what, if you look at the history of rates, more normal rates. The average rate over last year is 7. We're less than that now, but rates go all the way up to 8, and we've seen rates as low as mid 2s. So people still need to buy their home. They still need to right size their home. They're growing families, or their children have now become adults and have moved out. People still want vacation homes and investment properties, and life is still going to happen regardless of what's happening with those rates. What's so important is talking to your licensed loan originator and making sure you're working within your personal budget, regardless of what's happening. So we do feel what the future looks like is that rates are going to come down from where they are now. We'll have another refi boom. Everything is cyclical, so that's coming when we don't actually know. But as I'm telling everybody, is you're just going to marry that house, and you're only dating that rate. So
Yeah.
get in as soon as you, because industry gurus are predicting that when rates do come down, even by a half a point, it's going to be total mayhem out there in the industry again, because we've got so many that are qualified sitting on the sidelines waiting to pounce. So we still have an inventory issue here in Massachusetts. It's a major issue. That's not likely to go away, but those purchase prices are going to continue to come up. So don't worry about the rate. Work within your own personal budget. Marry the house. You're only dating that rate.
And I think those like phrases are so important. Like we see it, at least for practitioners, we hear it a lot. And I think we just need to keep on telling the public that, because I saw something the other day that literally a certain property that they helped the client, an agent helped the client buy in a year had like increased in value by like at least 50 grand. Like how amazing. And it was just in such a beautiful market where people want to be, that it's important to have that sort of foresight. It's hard sometimes because you have, family, friends, and family members who've gotten these sort of rock bottom rates. And so that's kind of still tingling in the back of your mind. And it's like, just that was so abnormal, like
Yeah.
just try.
Was still have those family members that have 18 and 20% rates too.
Right.
So
Right. Exactly.
Yeah. I mean, I think the difficulty I have though, when folks are like, well, my rate was 20%. I'm like, yeah, but you paid like $40,000 for your nice single family in Reading on
Yeah.
a flat with a flat lot. Like, it's just not, I think my concern is just that, people do have to work within their personal budget. If you can't, or if it's a real stretch to afford the house now and you're not able to invest any money, and you're not able to kind of just live the life you want. Because I think people do have this perception that they are going to live a different life than how they do, now once they own a house. Like, they're not going to want to eat out at all. They're not going to want to go to as many concerts because they're going to entertain at home. And maybe those things are true, but in general, I don't think anyone substantially changes the way they live their life or what their personal interests are once they buy a house.
Right.
So, I always tell my clients, like, yeah, you should live in a place that you love. I mean, it's more in the long term, it's usually a better financial move to buy something where you won't have to move. You may want to move, but it's not going to be a necessity due to the space being
Right.
insufficient, not having enough bedrooms or whatever. And, that way you can make your decisions out of like your personal freedom of choice, not I have 4 kids and I live in a 2-bedroom finished Cape. Like, oh my God, what am I going to do? Because there were a lot of people in 2004, 2005 that bought a starter home and they got stuck in it. And, for a long time after that, because they couldn't sell it for anywhere close to what they paid. And so they ended up having to stay there because, when it didn't work.
Right.
So I think that's like kind of the advice I'm giving folks is like, if you can get something that's going to work for you for the foreseeable future, any potential, family changes you see yourself having, if you think you're going to have kids, get something where you can conceivably see yourself having those children. And then that way, down the line, if you want to leave, buy something better, buy something bigger, that's fine.
Yeah.
But it's not going to be a necessity.
Right. No, that's great, because then in that point you're kind of locked in, like you said, like versus having the flexibility of a rental that's going to grow with you. But at the same time, if you're just smart from the jump and like focus on what the future could look like, that's huge. In terms of, like, I know obviously, Kristen, you do a lot on the listing side, but you also work with a lot of buyers. How have you seen? Because I feel like it's competitive right now.
Oh my God, it's so competitive.
Do you feel like it's the same as 2020?
Honestly, it's worse. It's substantially worse. It is substantially worse than it was in 2020, 2021. Like, I just felt like, 2021, early 2022, I felt like there was this formula of, if you could waive inspection, go 15 to 20% over the asking price, if it was well priced. Like, obviously, that very much depended on, you didn't want to do that on every house, but like where it was priced relative to the market that it was in. And you could do a pre-inspection, you had a really good shot of getting your offer accepted. Like, I feel like 2021 for me, like the gloves really came off because I started having, clients were just left and right, like losing out on these properties they wanted. And so, I kind of trained strategies and figured out, how to get people, how to protect buyers while also giving the seller what they want. So I have like that, I do that all the time now. But, there was a brief period where, it was tough because, prior to COVID, I would not say that appraisal language standard in offers. Like, it really wasn't super standard. Maybe you saw it more than I did, Liz, but it wasn't something that was in almost every offer.
Yeah.
And now it is.
Yeah.
And so I think that now, I mean, there are these because the inventory is so low, I feel like every week there's like an it house or two in some of the busier markets that I work in, like Wakefield, especially, Melrose, Reading. And you're just seeing, I'm having to turn to my clients and I'm like, this may be listed at 125. I can see this going over 1.5. And this is why, because of what these other properties have done right
Wow.
in this area. And this is going to be the house that everybody who lives here wants to live in. And
Right.
I'm really sorry to say, like, I've been right. I don't want
Right.
to be right. I
Right.
don't want to have those houses go for these crazy numbers, but they are. And and buyers just have to be prepared for that.
Yeah. No, for sure.
So that's a really good point of what's changed since COVID too, is we had the big NAR settlement. And that
That's
caused
been huge.
a lot of stress or angst amongst buyers as to what exactly that means. Locally, I'll say from my seat, I've not seen a change. What it does mean specifically is that it has to be, can't be on MLS, what the compensation is going to be, but your listing aid, your as sellers, you list with your listing agent, and they typically split that commission with the buyer's agent. But it has to be spelled out in the agreement as to who's paying what. And the nerve-wracking thing was, oh my gosh, we've got so many first-time home buyers who are scraping to get their minimum down payment and closing costs and prepaid. How the heck are they going to pay 2.5% to the buyer's agent as well? So many thought, I'm just going to go alone and not have a realtor help me. And I say that is the biggest mistake you could make.
Yeah.
I tell everybody, not go it alone. You need someone exceptional like Kristen, because she's going to tell you exactly what she just said. She's going to tell you what you need to offer for this purchase price. I tell everyone, look, when you see an asking price on MLS or on any of your searches that you're looking at, remember this. That's just a mindset. That is a marketing idea. Rely on Kristen tell you what that property's worth. You could have a seller that just said, nope, I need this amount of money because I'm getting a divorce or whatever their circumstances are, and I'm definitely at this, definitely. I don't care what you say my house is worth. This is what I need. Doesn't mean it's going to sell at that price. So Kristen could have her buyers come in and say, don't offer a penny more than $50,000 less than the asking price because that's all it's worth. Or she could say, look, this is exactly what she was just saying. It is super competitive. I think if you really want this, you get 100,000 above asking. It's all about those comps. The list price means squat. Rely on your realtor, your expert that you've hired to help you navigate that. And don't be afraid of how, because 99.99% of the time, the sellers are still paying for that.
Yeah, so I mean that's definitely true. I haven't actually noticed a personal change with that. I mean, obviously my process has changed. I think things are a lot more transparent. I'm having buyers sign agreements prior to showing properties, so we usually do an interview. I do find that more buyers are interviewing multiple agents. I haven't seen a huge drop in the number of agents as a result of this. That may be coming, I don't know. But I will say like that you know, listing price, and you made a really good point. Listing price is a marketing tool. So for a property like that one, I knew it was low, even though, the house still needed some things. But there's a lot of homes out there right now. I mean, the first like several properties I put under agreement in like January for buyers. I think it was 5 buyers under agreement in January. And of those 5 buyers, like one paid the asking price, 3 paid under the asking price, and one paid almost 10% over. And so it was very dependent because a lot of those properties had been sitting for a while, or they had been delisted and relisted. We knew that they had a history of being difficult to sell. So, and my clients offered what they were comfortable with. In a few cases, I was like, please don't buy this, but they did. They wanted to. And so we made sure to negotiate a price for them that, was an advantageous price for them as the buyer. But in a lot of cases, like just because you get something under the asking price doesn't mean it was a good deal. And just because you paid over the asking price for something doesn't mean that you didn't get a good deal, because it's about what the value is of the property. And, utilizing certain types of strategies when you're buying can actually really help you get yourself into a position where you can actually get properties for under what the top offer is because your terms are better. Right now, when you have 20 offers and they're all above the asking price, like so much of things, is all about the terms that you're offering. So that's what's important.
Oh yeah. I think it's always interesting because I usually get involved, obviously, as you guys know, like after an offer
Yes.
typically. So like, I always have that conversation with buyers, like, so what happened? Like, how long have
Yeah.
you been searching? What, in this particular one that you won, like, how did you win? Because it's like you were saying, Kristen, like everything is kind of individualized. Some people are
Yeah.
going under asking, some are going over. The terms absolutely, I feel like, is the key because I have noticed recently, I actually saw on MLS on a deal that my client accepted. They had put on MLS, like even the seller's preferred closing date, like putting things out
Yeah.
more, to your point of being transparent. I feel like there's a lot of that because I'm sure listing agents are feeling very bogged down by the amount of interest on each listing, but putting as much information out there on MLS is helpful.
Yeah. Of course, people still have to read it, which most of
Well,
the time, like, many agents don't. But it's still good to have it. It's
yeah,
still good to have an agent where they're asking those questions because that's what's important.
absolutely.
Right. And to that end, you need a really good loan officer. I'm saying that because, like,
Yeah.
I do the most thorough there is in the industry. Kristen will confirm that. And I jokingly say it's your blood, urine, EKG, negative COVID-19 and hello. Buyers know they're going to have to give me everything, and I'm going to thoroughly review that so you're not living in the gray area. I just had that for clients in New Hampshire who are longtime clients buying their next property. We're cleared to close. We're ready to go. But the buyers on their property, their loan officer didn't do their job, and they're not cleared. And it's very stressful. It affects 6 different transactions. It's a domino effect. And this is a lot of stress for a lot of people because one person didn't do their job. So I say it all the time. The most important thing you do is hire the right team. So we call this right here your dream team, with your great loan officer, realtor, and attorney that are all going to get you to that table on time, on budget. But it really does matter who your lender is. And if somebody has not asked you for all those documents and has not walked you through what your potential payment's going to look like, your cash to close, and focus the conversation on your own personal budget, that should give you great pause. Sometimes quickest is not best when it comes to quickly, I need to get a pre-approval in 30 seconds. It's garbage in, garbage out. Most realtors are not going to accept that anyway. They want to make sure that loan officer's done their job. But for you as a consumer, this is just the biggest debt of your financial life. So, choose wisely.
Choose wisely. I mean, the amount of loan officers out there that could, there's obviously the spectrum of what you can qualify for, but like having the conversation with your client about like, what do you feel comfortable with? Like,
Yeah.
pushing for your max. What's your max? What's your max? It's such a big difference because you come from a perspective of, I'm a partner in this transaction and I want them to have a great experience and not feel like they're, house poor.
House stretching.
Yeah. Yeah.
And your max is normally like 45% of, is it your after-tax income or your pre-tax income, Kathleen?
Oh,
yeah. So, I mean, that's a huge amount of money. That might be 60% of your after-tax check, like for both of you, if you're a couple who's both working. I mean, you can't. Realistically, you shouldn't be spending that much on housing. I mean, obviously what people do is their choice, but they shouldn't be spending that much.
Right. And we don't count in things like daycare unless it's a VA loan. So, that's a huge expense. I've had clients that put into their first house and now they're calling me 2 kids later and saying, OMG, we're drowning because daycare is costing us 30 grand a year. And we have to do something to get rid of some of this debt. So it's a real life problem that's out there, but things that you have to plan accordingly for. So if you're maxing out your comfort level, just be sure that there's going to be less stress in the future, that potentially you're going to have more income coming in a very short period.
And also just kind of circling back to having a good loan officer sort of in your back pocket, it's important too, when presenting those offers, when Kristen presents them and includes that, their pre-approval letter, the listing agent seeing, who they're pre-approved with. Like that's very powerful as well, because this is all a relationship business. It's not just the relationship with the clients, but it's the relationship with the other people involved. So the sellers team, and if they know, Kathleen's work, they know that they've had successful transactions in the past, it just makes a huge difference.
I just had a case where, so my clients have an existing relationship with the Bank of America lender, who has his own team. I've actually worked with his team before, and he's good. I didn't refer him to them, but he's very good at what he does. He gets loans to the closing table, but Bank of America has a terrible reputation. And these clients had a pre-approval with Bank of America. The other folks, we were exactly the same terms, same everything. The other folks had a pre-approval with guaranteed rate, and I think it said that they've been fully underwritten. My clients have always been already also been fully underwritten, but it didn't matter because, the listing agent, even though, I know him and I explained my experience with these folks and I explained everything, they ended up still choosing the other offer, which was like fine. Like, I think, had my clients like, I think my clients were like somewhat like they really liked the property, but they were a little lukewarm on it. So like if something had changed, like, I think they could have gotten the house if they had really wanted to. So I don't think it was like any great loss that this particular transaction didn't work out. Because the listing agent gave us some really great guidance. Which I think is another point is, having a good team. Your buyer's agent should be talking to the listing agent and figuring out, especially in highest and best rounds, where are the offers? Where are you in the pack right now? Obviously, a lot can change during that round, but what do the other contingencies look like? Like, what are they up against? Because when I bring things to buyers, like, I'm not saying, oh, you have to do this, but what I'm saying is this is what was said to me. And realtors, if they're a member of the National Association of Realtors, have to follow the Realtors Code of Ethics, which means they cannot lie. So if, a realtor that I know is telling me, something, I'm going to be passing it on to my clients and in general believing that that is true.
Right.
And, because they would have no real reason to mislead me. I mean, obviously they're advocating for their clients, but, I always tell people in the highest and best round as a listing agent, like, you have to do what you're comfortable with. So, I'm just trying, I always try, and most good listing agents are, just giving you the information that you need to guide your clients in the best way possible so that they can do what they're comfortable with and make their best offer with no regrets.
And your loan officer should have called that listing agent and fought for them too by saying how that I did take your how quickly, all of those things.
Yeah,
like,
he actually did, but it is, it kind of is what it is. He didn't call till like I think towards the end of the day, but he did call. But I do think it made a difference.
Oh, it makes a huge difference, I think, because it's just also local versus non-local, all of that too, in terms of like having, like, I love the little slogan, Kathleen, the National Team Hometown Service. I feel like that all of that has a big impact, just the comfort level of the other side, because we're there to impress them essentially. And we've had many situations where, we're kind of looped into that offer package being sent to, like, here's lender, here's attorney, like, we are all set, like, pick us, I feel like little things like that make a big difference. Just thinking, I feel like maybe to end things kind of reflecting back in the last couple of years. So harder market, but values are, obviously increasing too. I wanted to go back to your appraisal part, because I think that that's an important aspect of what we're seeing now too. Have you seen like the fact that properties are not appraising? Because I feel like we had that obviously at the very beginning of just the value like skyrocketing, when things got really hot during COVID, and then it balanced out. But are we seeing that already? I had one this week that didn't appraise, so that's why I'm asking if it was just this isolated situation for my poor client, or are you seeing it more?
Well,
I mean,
I'll tell you,
I haven't had any problems, but except for the one that Kathleen and I were doing together.
Yeah, that's the only one, knock on wood, that I've had an issue
Yeah.
with. And the listing agent knew. They knew it wasn't probably going to appraise. So I think this time of year it's cyclical. Coming out of the slower months of the year, the winter months, coming into the spring, when everything starts hitting, those first few that go under agreement that are setting the bar and going for higher than asking price are your first comps for the next ones. So when there haven't been a lot of sales of the winter, the first few are going to be the hardest. What's really key is having someone great like Kristen, so she can call if she knows or has an idea that other pending sales are about to close, and getting an idea as to what they may have closed for, maybe waiting to have the appraiser go out there. So if she knows, like this has happened to us, she knows that a listing that was going to be a really good comp wasn't closing till next week, I'm setting my appraisal the day after so that we can then use that, and that helps. So that just goes more to the point of having a really experienced team. It matters.
It definitely does. Like for that particular case, like we knew that there was one that was closing. Unfortunately, it wasn't closing till too late for us to do an appraisal unless we had extended the closing date. But that one closed for it was a similar home that closed for a lot more than what my clients were under agreement for. But my client's home came in low. Then we ended up with like some sellers that were fighting with us, and it was just a whole thing. So it was not my favorite transaction on the planet. But it all worked out in the end. My clients got a different property that worked for them better. But that's really, I mean, it's pretty rare that I have appraisal issues.
Yeah.
Because I'm usually, basing it off of data and, but also kind of adjusting for current market conditions. But you never know what a particular appraiser is going to do. I mean, I've had properties come back with problems that I didn't think were going to have problems. And then I've had properties come back without any issues that I was really worried about. So, it's always kind of what appraiser did you get? How well do they know that market? They are supposed to know the market. They
Right.
are supposed to accept appraisals where they don't have a good grasp of that local market. But I mean, people do what they do, and it's hard to prove that. So,
Right. No, absolutely. It's a key factor, obviously, in the whole thing. And I do see now the appraisal contingency language a lot more. And I don't know if it was also just a shift in what just lenders also would deny you based off of. Whereas, back in the day, I feel like if it didn't appraise for that value, it was automatic denial. Now we're looking at, can you still afford it? Can you still have the funds to be able to maybe even adjust the down payment and still close? So that's, I feel like, why having that appraisal language is so important. And there's so many agents where that is their belief and will always be their belief that if it didn't appraise, we're safe with the mortgage contingency clause no matter what. And it's just not the case.
it depends on the lender, I think, and the lender's policies. In theory, I mean, I don't know. I'm going to let you talk to this more, Kathleen, because I have some thoughts on it, but I want you to share first.
Sure. So I can tell you that I describe an appraisal as like a boat in the ocean. And I've got Kristen in the front of that boat because she knows exactly the market we're coming from, those winter slow months, the market that we're in and what we're heading into. She's doing a 360 view of that property because she has those comps or comparable sales, what we refer to as comps, to guide her client, but she's also feeling out that listing agent as to what's going to be the hot points to massage that offer to make it the most attractive offer. And again, it's not always the highest. In addition to that, you've got to account for adjustments. So my appraiser is in the back of that boat for good reason, because per their license, they're only allowed to use the 3 most recent sales that have closed, because pending can blow up, closed in the last 30 days. They can comment on pending, they can comment on the market, but the data is what it is, as we say, and they have to stay in the same neighborhood. And that's the big thing that a lot of maybe less experienced don't understand. They could be using a comp from the other side of town that's in a completely different part of town, a completely different value, and it's not a good comp because you have to do one neighborhood, same school district, and so forth. So one of the major advantages with us at Fairway is that we have our own appraisal management company, which is huge. I still have no legal authority to speak with that appraiser or even know who it is that is assigned, but all of ours are thoroughly vetted, and it's a local appraiser who's going to do that. I point that out to every listing agent, and that in of itself has won us deals, because the buyers could be choosing an online lender or one of these major national banks that we know about, and they might be sending an appraiser from Rhode Island to do a Wellesley appraisal. And it matters who your appraiser is. It matters who the lender is. I just keep saying that, but it really does. This is not where you want to do things on your own. This isn't HGTV. Choose an exceptional realtor, choose an exceptional lender, and you've got to have an exceptional attorney. I can't imagine doing this without someone like you, Liz, on our side that's going to title insurance and things that could come up that we never anticipated. So you've got to have a good team for the unexpected.
But if, like, Kathleen, if a property, though, doesn't appraise at what the buyers are paying for it, is that cause in your mind, or is that Fairway's policy that they would receive a denial?
Oh, I'm so sorry. So really it comes down to, well, what did it come in at? And can we massage the deal to make it work? So it's all about what we call value. So as lending rules are, we must go by the lesser of the purchase price or the value. So if the appraisal value comes in less, but it's only a little bit off, it may not kill the deal. There are times when it comes in so significantly less that we have no choice but to give a denial. If that is an extremely rare circumstance, and I have to say in my 21-year career, that's happened once, and that happened on the one that Kristen and I are referring to. It wasn't even close. And that was just an anomaly, I will say. What I can tell you is that 9 times out of 10, I will tell my clients, if it doesn't come in, that doesn't mean the deal is dead. It means we need to have a deeper conversation, because I'm going to show is that you could still make it work, or potentially you talk with Kristen about going back and trying to renegotiate as a direct result. In this market, that's incredibly rare, because this is a seller's market. So you're not likely in Massachusetts to get a renegotiation, but that's not my lane. That's Kristen's lane.
Yeah, I mean, the thing is that if you're under agreement and the property doesn't appraise, there is usually, and you don't specifically have appraisal language in your offer. I mean, most of the time, a seller wants to get to closing. They don't want to go back on market. And if they accepted your offer without appraisal language, you weren't promising to make up any particular amount of difference. So even if you can, usually that can be a point of negotiation. In the case that we were talking about, like, my client was happy to make up some of it, but we were going to ask for a reduction of part of the price. And we just never got to that part. Like, the seller is really clear that they weren't going to do anything. Yeah. And it really, it was unfortunate. I don't think the appraisal should have come in where it came in. Like, I was very confident in the amount that my clients were offering based on what was happening in the current market and what that particular property offered. But it definitely didn't show well, but it had a lot of upgrades. It was just, kind of the property you want all your clients to buy. It was a little dirty. The paint colors were wrong, but the space was there, and all those things were going to be really easy and cheap to remedy. Yeah. But I think the appraiser got, there weren't a lot of 1-bathroom comps, and the appraiser got influenced by by the appearance of the property. It wasn't even that the condition was bad, because it wasn't. It just wasn't prepped to sell at all. Yeah. So, and appraisers are humans. They sometimes get influenced in ways by the appearance of a place that a buyer doesn't. So, or that a buyer does as well.
Right. Yeah, there's so many things to unpack. I feel like this was a good summary of what we're seeing. I think deals are a little bit more challenging. I feel like is at least from our perspective of what we see from a couple of years ago. Things had its challenges then, but we figured it out. We had, like you had said, Kristen, the formula, and now things are changing, and we just have to catch up to that point where we know what the formula is again.
Absolutely.
Yeah, but I know you have to jump on another call, and I appreciate your ladies' time. It was great catching up. And
great.
Yeah, and if you have any questions for any of them, I'm going to tag everybody's socials on here. And it was, again, great to see you ladies. Thank you for
Awesome. Bye.
bye.